Okay, I think everything's working. Let's just double check the audio. Is audio fine on your guys' side? Can you guys hear me okay? Testing. Okay, I think everything's working. Let's just double check the Yeah, looks like it's okay, just a bit of a delay. Okay, let's get started. This market's moving. Great time to be on. Last week audio was quiet, that's why I'm a bit anti on the audio. Okay, testicles. Ha 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 ha. Yes, guess it works. Okay, let's get started. Let's look at Bitcoin. We'll do the here and now since things are moving. See what's happening. Actually, let's maximize this here. I tried to do those two displays. Don't really like it. Just focus on looking at the order book and just talk from there. So we're seeing a large sort of sell-off, and it's to be expected. We usually expect prices to move in one direction aggressively on open. That's just, again, just a part of the nature of how the market moves. We're currently in a New York consolidation. We're waiting for 2:30 my time, so 9:30 or 10 o'clock for an actual open to sort of see where actual market direction is. Looking for Tuesday's low to be taken out. We marked that on stream a couple of days back. Thank you. I know I did it. I got someone to do my hair. Yeah, I don't know. It's grown on me. I just do it for like an instance. Like, oh, you know what? Let's see how I look. I look fresh though. Hella fresh. Racially ambiguous. Thank you. So, I mean, I was waiting for Tuesday's low to be taken out on Wednesday. We didn't get Tuesday's low to be taken out. And if we go back and see what we potentially saw for the Tuesday low, even though we did not take it out, it just, someone just came in, said, you know what, from 31.19 to all the way down, I want to buy, I want to average down my order, left this large bid open. And the reason why I wanted potentially to target this area is because we know that's the low we created for the week essentially. But reasons, first time watching stream, thank you. Hopefully you enjoy it. It's gonna be an hour. Hopefully you find this informational. I will try to speak slow. That is one of the feedback I was given. I speak too fast sometimes. So the reasoning why I was looking for that, and potentially why we did not get that, is, as you can see here, there was a large amount of red dots here. We're potentially looking for those to hit into. If those hit into those bids, those will become pressure downwards, and these are why these walls exist, because those are basically there to catch any stop. So these stops here, these resting stops here, they'll be absorbed by these limit orders. They didn't end up doing that. I think they came to this point and saw, you know what, we have enough in terms of shorts stacked up. We don't want to really release these shorts, and they didn't really bother getting out at this point, or they just was happy with the accumulation they had here and decided to raise price. And it's, again, a missed opportunity if you're sort of further and say, maybe they come in, like the low one more time, they push out. It is what it is. But at the end of the day, you got to sort of say, is this a trade you could have taken, looking at it in hindsight? And the reason why you want to say, okay, is this something I could have taken in hindsight, is because then you know for the future, yes, that's something I could have taken. I was busy the entire, I'm still busy right now. I'm like squeezing this in, sneakily streaming for you guys. I should be doing something else. Shh, don't tell anybody. But this is more of the characteristics that I like to see in terms of taking like a very clear trade, hits into an existing wall. For instance, the way this came about, comes in, let's say you missed the initial trade, they create pressure uppers, leave this standing for the entire duration of this entire move. So you know that once they clean out these walls, you're happy on the second leg here to push down. Why short? It's trying to short the lows. High blocks indicate cancel long liquidity. Especially the generation bottom. Oh god damn, no. We never say generational bottoms. There is no generational bottom. The only generational bottom is at 0. 0 is the generational bottom. I'm double checking everything. See, okay, the high box seems to indicate a ton of long liquidities right below the floor, then a ton of short liquidations right above the ceiling. Do you think New York will take about? Well, we'll look at New York in just a minute. I think there's a high possibility it can whip. So I think it goes, if it piles down, then it's course in the course of the next couple of hours. You're looking for it for the most part for it to path up. Generally speaking, again, nothing constitute financial advice. I think I have to start saying that now, since if the price came to 22,700, I just blind long make like 1% 2 times. 22.7 around here. Okay, cool. Oh, so you managed to get this one. Oh yeah. You know, I was a bit. You know, it's like with me, I've been a lot busier, so I haven't had time to just like see, because I don't like taking blinds. Like, I mean, like if I had time, I would have looked at this. I'm like, and because it was Asian time, it was Asia set up. The Asia bled into this, then you just reversed on an Asia session, gave you the print of Asia. You could have looked to fade Asia if anything, like even if you missed this, just purely based on the fact that Asia just gave you a whole fat range to play with. New London came up here. I think this is London time. This is your daily imbalance. Open up. Gave you that bearish sort of print here. As you can see, longs just coming in slightly on these dots, and another sort of another setup. Just blind. It's just blind. What if you blind it and it doesn't work out? Huh? Have you thought about that? You know, just YOLO it. Okay, always YOLO. Go bong bong. Hit them with the bong bong. I mean, for instance, this is again a super nice sort of short setup. Came in, hit these longs. They didn't bother hitting the walls. These ones were removed. They let the buyers to try and see how far the buyers are. Well, if there are buyers in the market left. And there wasn't. You only lose 1%. Yeah, true. Okay. The YOLO, I'll take that. Always YOLO. Oh, nothing constitute a financial advice, please. Do not hold me liable for anything. But you're looking for this sort of scenario in terms of where they release these walls, they let the sort of buyers try and come in and say, okay, are there any buyers in the market? And then we get there are no buyers. Like, okay, cool. There are no more dumb people that are willing to buy here, so let's just bring it down until and collect our money, because it's not really money for them until they sort of liquidate those positions. I've only made I think like eight. Just YOLOing? Oh hell yeah, man. What's technical assets? Nah, you just blind it. Coming into Asia, I mean London, New York rather, and the New York session, we see again where Kababish has been just blinding his lungs. It's not a bad. I mean, it's not. It's looking at it, it's not bad to blind here. As you can see, came in heavy sells, pulling back down. Heavy sells around this area, instantly peels away, and these are just the cascading of the longs that were accumulated here, who didn't get out on these small micro pumps or micro pushes to the high. And if we sort of this to the left, oh, doesn't like that. No, yeah, it does. There we go. We sort of move these here, and we can see these clear prints. My head's covered. My big ass head's covering it. Let's just go back to this. And if we look at, we'll start with Renko, I guess. And we sort of see how 1, 2, you get your high, pull it back down. We're in a consolidation. You see this pull up. If we still keep in consolidation, you're looking probably to short 23 200, which is comes in around here. So by the time this starts peeling away, we want to see if orders come in around here. If they drive it higher one more time, they'll look to take out this guaranteed, which will sort of cement itself above here. As you can see, the orders are there for us to pick that up there. But other than that, it might tick one, pull it back down, and this will essentially be your 3 ticks in a consolidation zone and a reversal of the direction. And the direction sort of, I mean, if it's reversal direction, it'll probably be going up, so you'll probably be better off in a long position, just for safety's sake, generally speaking, in this sort of environment. We'll sort of come in and see how the session range is playing out. As you can see, came in, stop hunt London. That was this area here where we stop hunt into London, took out the liquidity here, and you can see time is such an important element. I think I need to get this on Bookmaps, and then it would be great just to have these boxes around. No problem, man. Hey, I know, such a nice haircut. Thank you for that. There's always some fucker who was protecting these lows. Let's see, it's not really protecting rolls, rather I think he's just absorbing with icebergs at these orders, because they're just phantom bids at this point. Like, as you can see, the bids just like coming and going. There's no bids present here, so all of this was absorbed by like an iceberg, and which was this higher low here. As you can see, that candle came in just red, everyone's shorting, absorbed into that, just pressure up, pin that here, just let people feel pain. And what you're looking to, if you're sort of feeling short, you want to be under here. If you're feeling short, you don't want to sort of be above this sort of area here. If you are above this area, you're trying to accumulate longs, which it is doing to its credit. It's trying to accumulate sort of buy positions here. As soon as we can get buy positions, we can start whipsawing it down into lower bids. So that's sort of the spot books. Let's sort of look at futures with more liquidity on the downside. And if we sort of come in and look at where the liquidations have been for this area, still using 10 tick size. Yeah, I always like using 10 tick size. It just works. One thing you might want to do if you're using the same tick size, either set it to manual or set it, if you're doing that, and set it to low. If you set it to none, it's still fine when you're in close. But when you sort of start looking to zoom out, you want to sort of adjust that. So depends on how you want to do that. But either none or manual. I like manual with like 2 sort of Gaussian blurs. It brings it much closer. And same thing with spot. It's like sometimes you go a bit more aggressive because there's less orders on spot. But it just all depends on how much liquidity you see if you want to fine tune it. But 10 tick size works perfectly for me. It's just for stops and everything. Because one is just too sensitive, you're just in scalp territory, and I'm not too much of like a minute scalper. Barry tweeted about, okay, instant short, oh hell yeah. That's what these buy games, and that's the Barry buys. And the Barry buys, Barry gone. Still looking for this weekly liquidity to be taken out. If that does get taken out, and if we look at it on the future market, there is liquidity there for it to hold it up. So that's essentially the area targeting. As you can see, that move here was captured on the future market, hit back into that, absorbed by these longs, and you can see every time someone wants to short or liquidations happen, these are instantly eaten up. And that's essentially what you're doing. You're following the money and you're trying to go the opposite way. You're seeing short liquidations. I think someone's like, oh yeah, I got the perfect short here. Yeah, let's go. So red candle, I can short this. Like I can short this. Let's go. Oh, it's just going down. Ah man. And that's what you gotta really be looking for. Essentially, yeah, that's pretty much what you're trying to see. 225 go straight through. A lot of people are looking for that. Supply to for the lows. You get run straight through. We'll see at the time, and then it's because it's nothing you can see in the future. You can only make sort of educated guesses. And educated guesses come in where we're seeing this liquidity here, pulls back in. If this falls through, because we have too many people willing to go long, and they need to try drive this past lower, they'll do that. Or if people start taking profit on shorts here, they're like, okay, no, I can't let these guys do that. Pull it up, try get people enticed into a long, drop it and pull it down. So it's about trying to do the opposite of what these large dots are doing. So because those are your basically your indications of markets are doing one thing. We're seeing again that trapped area of liquidity that we showed last, I don't know when we did that, Monday or Tuesday. We see that area. We're still trapping more shorts here, so it's like a very large cluster. So I'll be surprised if we do manage to drop below that or start accumulating sort of longs here. They let this go free past this for too long, because that would be just a waste of money for their parts. So you're looking for short liquidations before this drop down, and we've only got a couple versus this area here. So that's something that you want to do if you want to sort of be in that sort of short. Getting some large buys here, but again, you're seeing a lot of selling, a lot of induced spot selling here. So even if we drop it down, I think it just goes into its consolidation here, pulls it back. As long as it accumulates more sell positions or shorts, we're pulling it up. If sort of have a look at the cumulative volume delta, I know you guys can't see it with everything in its way. As you can see it, yeah, there we go. See my mouse? I can't drink this up. I think better. Oh no. Oh, what? Chat. No one's using the Discord chat anyway, so we can just drop this down. Pulling back up, as you can see, anytime we had the very fast, and the thing you want to use cumulative volume delta for is speed versus actual movement. And I've given this to a lot of people in terms of who's been familiar with my content, is speed of tape or energy versus work done in terms of movement. So work done again is just force over a set distance, and the distance in this will be price, will be a price correlation. As you can see here, a lot of energy consumed but not much work done, so not much movement, but there was a lot of energy, so that was absorbed. So there was a lot of positions into here, and again, it doesn't look like there was much here, but the activity is all within this single candle bar. And you can just see that how it just ticks a bunch of absorption, and it just instantly peels its way down until all of that is dissipated and goes back into consolidation, because it needs to charge up. Essentially, think of it like an alkaline battery. Is still alkaline batteries nowadays? I don't think they use alkaline anymore. No, they still do, I think. So now you're looking at that here. A lot of selling pressure, a lot of energy absorbed on the downside. So we need to go either release that here or move into consolidation to then drive it higher, to then release that at somewhere else, because this would be telling for, again, not much distance moved, a lot of energy moved. But so this is again telltale signs of absorption. So it's more leaning towards the bullish side for the moment. So even with this small sort of big green tick, not much is happening because people are trading this. I think there are equal amount of hedge the other way, so pretty neutral in terms of the way it's moving. So as you can see, not much. And you want to look at the future to contrast the long versus short ratio. Again, spot and future books will be different, just purely based on the fact one might be leading, one might be lagging. Just depends on who's leading them, who's driving the market rather. In this instance, it's pretty much the same, where you see a large amount of absorption. That one last tick, smashed it, pull it back up. Now we're seeing our buys come in, super aggressive. We want to see, as you can see, very fast sort of pace is moving at, and if it keeps getting absorbed, we're going to try counteract that, moving to the VWAP, the volume weighted average price. So that's something you want to sort of take into account. It might be something where you might see this absorb at the same area and then peel it down. That's something you want to see. We're sort of moving back up to the areas we were here, so we're evening out in terms of for the spot book. how that will sort of look in the chart, and what you're sort of looking for is if you're looking for a, say at this, you're looking for a close below here to be bearish, or even if we drive it up higher, you're looking for it to be higher. So that just means they just induced a lot of buying, a lot of longs, bring back down, close it here to try and absorb that and control that here. So again, as you can see, spot, not much activity in the spot, but you can still see that in the future market, and that's something you do. So as you can see, you want to contrast the two, and you want to look for one to be leading, one to be lagging, and that's why you want to have both up. Just in some instances, one will be much clearer than the other. So we're still within the sort of time parameters for the setup. Again, it's 10 o'clock Eastern Standard Time. We want to see the setup finish. Once that setup finish, you want to see what direction you're getting out of that, and that will be sort of the way you trade for the day. And some instances where you get like this, where you get sort of, okay, you want to be this direction, and this just fades it, and then again closes around here. So remember, you have an expiry on these sort of trades, and sometimes it might just continue on, so you might not want to get rid of all of it. And the idea is you want to get rid of partials at a point. So at this point here, you're taking partials off, and you're taking the rest off, either stopped out here or stopped out here, depending on your sort of risk tolerance and how much you want to capture of the rest of the trade. And you're saving yourself the hassle of this entire sort of drawdown. Or as you entered in successfully, it's just exiting a trade. And how that will look if we go back all the way to the 3rd of August. I have to do time zone calculations. 9 o'clock, I think, is my time. Around here, there we go. Pulling back in, as you can see, if you just looked at this, you could have seen a bunch of longs coming in, and you can see this cumulative volume delta very aggressive move on the uptake, very weak on the down, consolidates down, and it just slowly bleeds, and you can see there's, you finally got the bleed here, and we started only really moving at this sort of conjunction. As you can see, even though this has a slight dip, this was a larger dip here, so more movement here, more energy sort of expended to that move. So that's something you want to do, and that's sort of how I read sort of cumulative volume delta. I use it as a function of work done, because it's energy over distance, because energy is distance. Distance. Yeah, orders are the energy, and distance is price, so that will be work done, which is cumulative volume delta. Hey, physics. And there are points where you could potentially try counter that. I mean, you can see how it came into here, and this is sort of like just looking at trades and just sort of seeing, okay, when do you want to be out? Let's say you enter into this and for a couple, or for a scalp, you're sitting in a slight drawdown, but you know that you get some sort of reprieve, and the market will give you an out. And if it does this, and if it pulls up here, you can see how they've been very controlled under this. Then they let one pip up to see or 2 ticks, 1 or 2 ticks up. You can see that they let to see, and it's the same thing that we saw prior. They open this up to see if there's anyone willing to buy at this price. Not many people, so they're okay, cool, all the buyers have exhausted, we are sort of willing to run this down. And again, on the sort of on the charts, it just looks like just a bunch of clean highs, or highs that are very close together, and you're just looking at these closes to see where the bias is. And the bias was to definitely keep price under a set price before driving it down further. Not much in the way of things. You can see slowly ticking up, it's just evening out, moving very slow, letting it slowly bleed upwards. Again, not really closing below here, so not really sort of a high, really clearly defined sort of short past this sort of wick. We sort of hit this area here, so that's something that you want to know. See if we sort of bleed into this, but ideally you're looking for it to move aggressively down into this area like I said, you want to counteract the sort of open and sort of move in the opposite direction. And finally, the spot book, as you can see, large pickup of volume buys. Maybe this was what they were waiting for at this area. So as you can see, moved very fast, but not much movement. So you know that was definitely iceberged into a short or a selling pressure or a sell. So that's something that you might want to expect to do the opposite of. So you might want to see that as a potential downwards movement into this sort of area and this bid here. So you want to see that drive down into this at the very least. And this is just how the market will move into a whipsaw motion. We see if this is enough for them to sort of take it down, they'll sort of try to take it down into these walls. These have stayed still, so that's sort of something else you can tell. These have not been fleeting away. If this has been fleeting away, that means they're just trying to lower price upwards. They've been staying still, which is sort of a nice sign that we might have a downward slope prior to the uptick. Let's sort of look at Ethereum. We spent quite a while on Bitcoin. Let's show some love to Ether. So move that up. Ether moves more closer to price, I think, on both spot and futures relative to Bitcoin, just purely based on how manipulated it is. Any smaller moves will liquidate up more traders than Bitcoin will do in a larger move, just because I think a lot more people are in Ethereum longs and shorts, just because it is a smaller coin, smaller relative to Bitcoin. And so they say, okay, cool, it's a smaller price, I'm willing to buy more. So more is then liquidated, and it's just, again, in nature of the beast. I do have set to auto, so let's just go ahead and reduce that back to manual. There we go. Probably, yeah, it looks a bit spotty. So yeah, you want to sort of drag that until you sort of feel comfortable, and you start getting a feel for things in terms of what things look clear and what it doesn't look clear for markets. Sort of annoying sign here is we got a bunch of shorts. I think these were prior shorts here that got ran out, then pulled back down. This is all just sort of hairy here. So this is sort of the area you want to look to be above to be bullish in terms of Ethereum. As you can see, this these shorts here got run out, pulled back down, and so on. Let's actually look at actual price and enough of the history, because I know you guys like the more of the current ones. So let's see what it's been doing. Not much in the way of things. Exact same sort of pretty much profile as Bitcoin. Try and get rid of, there we go, get rid of some of the smaller orders. As you can see, it came in, absorbed. There was your London, pulls it back up, tests the high one more time, hits into this wall. Not much sort of movement, so it's probably like spot book that were driving this. But essentially consolidation, stop hunt, reversal, all in this small area here. And that's just a super nice sort of area you want to see. If you see a peak out, large outlier dot, the outlier got punished, pulled back in, and then same thing here, you got a downward sloping area here, pulled it back down into a wall, absorbed a lot of selling pressure, pulls it back up, and you get these orders to capture these and create pressure upwards, and that's essentially what you're looking for. Sometimes you extend up much further, and it's just depending on where you see sort of the areas, and you want to be looking at, say, a visualization on the charts to see what is potentially targeting if you're sort of targeting a different area. So if we do that now and drop that to the right, Ether, this is now. So it's just pretty much just wicked up high, and this is at 1:30, 1 o'clock. That's about 8 my time. Yeah, 8 o'clock. So around 8 o'clock, which is here, spiked it one more time, but dropped it into this low. It's just targeting, and I think it's just reaching for this low here. Again, a lot of people will buy around these areas for some reason. I don't know why, don't ask me. And on the books, it might not show up nice, but all you're seeing is this is the area where you want to come into is coming into the previous consolidation, which was this green candle. This is a potential short when we come into this and we pull it back down, at least on the 3 minutes. So we pull it back down and it just bleeds. No one willing to sell, no one doing anything much of it. It's just driving it. I think it's driving it slowly. No one willing to come in until we smash it into this longer wick here. And you can see that here they kept the area previously marked here and moved away because probably they didn't liquidate what they needed to liquidate here, so they need to add in one more leg. Even on the 15 minutes, it's just close off a what's known as a fair value gap. I think they call it a fair value gap. I don't know what they call things anymore. I don't care, to be honest. But whatever it does, it just closes off the inefficiency of the market and then pulls it down. So what you're looking for now is a lot of selling here to be absorbed. Once these get absorbed, you want to see that try push up off of that. Once it pushes up off of that, you're pulling back. Where are the Bitcoin bids? Where are the big bids for Ethereum? You want to look at the spot pair, so let's go ahead and do that. See, this is annoying. Change the color. Yeah, with Ethereum, it's like I said, it's pretty hugged together, but you always see around a quarter value or a half value. You can see 15,500 large bid, 1,500 very large bid, but Ethereum, like I said, stays pretty close together even on the spot books. Perpetuals, perhaps. This is futures. 1,600 as well. They like keeping on even numbers. Again, even numbers is always nice, and this also just takes out the stop, pulls it back down slightly. But I think we just trade the internal range liquidity for now. If we pull it back down, your 1,600 is a safe bet. Actually, we're moving down now, so let's see if we push it. I'm waiting for the walls to react, and we want to see if they try to run away. If they're trying to run away, they'll probably drive it lower. But we're seeing what we ideally want, which is a lot of selling in this area, very aggressive selling, and off that aggressive selling, we want to see absorption and a lot of energy waste. Essentially, if we go back into Bitcoin. And the spot pair, same thing. As you can see, these walls starting to meet each other up, and all of that energy is just dissipating and slowly coming away. As you can see, even smaller movements, but less sort of absorption. So we might drive it down a bit more, but it depends if they want to release deep traders out here. So we might want to mark it at this level and just say, you know, at this number. That's the start of the shorts. So they start here, they sort of end on the Tuesday low in terms of the super aggressive shorts. So ideally you want to see it slightly above here, so give those guys zero chance to enter open rather into a larger sort of position. And worst case, we get to come into and touch this area and just we want to run away. Essentially that's what you want to see. You want to see them run away from this area, let these people feel the pain of liquidation. On perpetuals, nothing again too much happening. Pulling it back down. These have all stayed the same. Maybe we get a phantom bid come in and just push it back, but again, you're looking for the reversal into a potentially you're looking for the absorption at this point. So even if you're if you're not in the short, you're waiting, you're not trying to short this move here, you're waiting for a potential long. The short was at this green volume dot here, and you're probably looking to let up off your short at 9:45, 9:30 depending on the open. If you look at ES and see how she's moving, again just moving back into that 41.50 bid, keeps it pretty even either way else. As you can see, the higher bids are up here, so you want to see potentially absorb into here, come in, hit up into higher bids, but it is the pre-market, so we have lesser liquidity in the pre-markets. So you want to see off the pre-market where we end up pulling back on and open, we want to see where it absorbs. Then we want to do the opposite of the movement it's been doing, because usually you'll be successful in doing that, as you have seen here. I mean, here it just opens. Whoop, it opens down. There we go. Just do the opposite. Here opens down. Oh, just do the opposite. Just do the opposite. You guys need any sort of more explanation? I'm trying to do, because like I said, I know I go to a bit too fast, because I assume a lot. There we go. Like I said, you're not looking to short that, and you're seeing that here. So potentially looking for that to open high. Once that opens high, as long as it's in here, that's a shortable area here. At least the 22.95, so you probably want to mark that on your chart. 22.95. Yeah, it comes in around here, just above this wick. So you're just coming around here. You want to see this area. You want to see these areas as potential shorts. If it plays within this on the open, that's perfect. You're looking for that to drive it down, but it's got a lot to play with, so it might be a very whipsawry day. If we sort of look at potential sort of catalysts, bring up the calendar. Just bear with me a minute. So today, I'm set to go to -4. Have a good night, everyone. I pulled it all night. Pack. I will hope to catch your live streams more often. No problem, man. Have a lovely night, man. Hopefully catch up on some rest. So 8:30 EST, which is current area we're doing. So 10:30, we've got a bunch of initial job claims, which is looking good. Actually, wait, initial jobs claim that went up. That's bad. Peace. We got some auctions off. Nothing sort of major in terms of catalysts. Just some import numbers. So we have been doing good in terms of exports. So it's, I mean, the US has rather, which is good. That means the economy is slowly growing. Trade balance is still down, but better. And those are numbers you want to see. Those are numbers we want to see if it's expected. Let's see what the expected was. So again, it's well below expected. I think most of the imports was oil, so that did take a large hampering. That is to be sort of expected. Like, we are importing less sort of foreign oil, so it is one. Can you? Oh, sure. La. Hello. Is this? I think it's on the Bookmap side, cause double checking audio. Like, how is my volume now? I think it's just my voice just tapers off. Continuous jobless claims. Again, a lot more unemployed people, which is not what you want to see. When 100k, never. Yeah, I think the audio issue, it might be on the Bookmap side, on the Bookmap stream. You're gonna have better. Okay, it's better. So it's definitely me tapering off. Thank you for that. Thank you for the compliment, Spicy. I like, my mic is here. Look, I can kiss it. But back to the sort of charts. As you can see, sort of absorbing here. Hey, Shade. Which is what we want to see. We want to see more red dots. We want to see these red dots continuously getting absorbed. As you can see, this light bid coming in. It doesn't look like it's strong, but at the same time, it's just constantly being reloaded, and that's again what an iceberg is. It's just an infinitely big bid, or an unseen bid. And if you don't know why it's called an iceberg, remember, just remember that anytime I say icebergs, think of the fact that you only ever see 10% of a normal iceberg, so 90% of it is hidden. So 10% you see, 9% is hidden. So you have 90% essentially of it left over. Not always 90%, but for an order. But you have basically, the thing is, you're not seeing the full basically bids for that area. We're driving price up. It's annoying that we're doing it like this. If you look at spot, it's not seeing too much in terms of reasoning to sort of like be long term, but in terms of short scouts, but we saw the absorption, like I said, not really a place to short, but we're seeing more people willing to buy, so it might be a case in point where they try drive this much lower to get people more antsy and more people more willing to be in a short. So that might be something that it might do. If after running out, I think the previous area was a short, because if they come back down into here, these guys, not all of these, but most of these guys will start letting up. And what I mean by letting up is just saying, ah, cool, I've broken even, let me take that off, I'm safe. Market gave me a chance to get out. And obviously though, you have those traders who say, oh, I'm break even now, finally things are turning my way, let's see if this can go down further. And that's that's sort of the psychology behind that area. And that's why I say, if they can come down to here, they'll probably try to accumulate as many shorts as they can. Let's say these people start doubling down, then just pull away aggressively. So it's all sort of give and take. And we're seeing that large sort of aggressive dot with and liquidations at the same area. So we saw anytime we come up here, these guys probably get liquidated. So these will be probably this push here, probably 23, 40, maybe even higher, to see those guys get liquidated. And again, it's dependent on the amount of leverage used to enter that position. But even spot is sort of turning up again, very fast moving tape. It just recovers everything back, just moving up. So this is more and more sort of shaping up, sort of be weird, be sort of downwards. But we want to see one more slam to the bottom on the open. Oh, that's not what I need. There we go. Willingness to show short, pull it back down, hit up into here, then pull it back up. So this is all what we want to see before 10. Remember, everything I do is sort of time based. It's like one of the easiest sort of setup. You get your range, you mark it out, and as soon as we hit 10 o'clock, this range sets up and finishes. And you can just add it as a note on your chart and just call it a day. So right now it sits at 22,980. 22,980. So you're seeing NY high here currently. So if it keeps driving price past that at 10 o'clock and you're moving this because it hasn't fully formed yet. Okay, I think I need to be zoomed in more. There we go. Then you're probably driving that up. Wherever it sets up, it'll start pleating off, and so if you want to see the bottom of the daily imbalance, which is here, and that's just the midnight candle for your New York lot, we can sort of drive that price up. That is 23.50. Let's just call it that. Nothing much, but they're essentially there where you see those bids there active on the spot. That's essentially, if we retest this area, we got a couple of areas to play with regardless, but we're seeing that area to potentially short back into it, short back down depending on how it opens. Because remember, if this starts aggressively moving higher, we're trying to pull back down, and we're trying to do the opposite. And the reasoning behind that is just traders will see it open and they see one thing, they start FOMOing into that direction, say, oh yeah, it's an update, it's the green candle, it opened green, oh, we keep going up, we keep going up. But more times it will try to drive against them, because it will try to counteract their order flow and push back down. So your ideal case is, again, a downwards moving sort of area here to then drive price up high into these areas there. future market now is sort of taking a sort of rest. Not many people entering longs. When New York dump, should be pushing. If it's dumping, it's pushing now. It's been a long time. If it's dumping, it's probably setting up at 9:45, then dumping at 10. Because remember, New York opens at 9 on the half hour. 10 o'clock is where we sort of give it sort of its break and say, okay, from 9 o'clock to 10 o'clock, we sort of watch it and say, okay, it's setting up down, setting up for to absorb, to push back. What's New York lunchtime? New York lunchtime is it's midday, man. Midday. The only reason why you would ever be concerned with sort of the down the midday is if we look at timings, and I need to bring out Google Chrome for that. What do I want? No, I don't want pricing. I already pay for this. God damn. As you see, slowly tapering off. And let's go over to, let's just say SPY, because we have the most data, and we want to do let's go 15-minute candles, just because I like 15-minute candles, but that doesn't matter. If we want to go through hour of day, and we want to do as much as data point as we possibly can. Market dumps because China attack. It's just, I mean, market doesn't dump because of something. It just goes down based off of catalysts. So it just uses that as a reasoning to do something where it normally may not have. So as you can see, the most sort of volatile sort of area is open and close. If you pull it back in, it's still a 50-50 split, but why is it on the half hour? That's why I don't like it. Let's go into Bitcoin rather. Because remember, New York opens on the... There we go. Hour of day. Oh, this is midday my time. I need to do -4 off of this. That's why. I'm stupid. Oh, it doesn't go any further back. Oh, it's too many data points. I get that. So 12 again. Hams it out. Like lunchtime is where people get sloggy. The highest sort of volatility area is 1300 my time, which is -4 from that, which is close enough to the range setup. New York open here for me would be the time now here. So high volatility. Midday would be 1500. That makes sense. Convert to oh god, you guys can do your own conversions. You guys have no. It's in universal it's UK time, so it's basically UTC +1. So you -1 and minus whatever from UTC. There you go. But as you can see, the most of the volatile days are, and there are sort of trends you can sort of find within the hour of day, and there's a lot to be made in terms of the importance of what time you want to trade, just purely based on the fact that traders do different things in different times, because people like to sort of trade at one time or trade with exchange opens and whatnot. But right now we're sort of... No, this isn't EST. What am I saying? It's 9 o'clock EST. Oh yeah, it's in EST. I set my bookmaps to EST? Did I do that ahead of time? No, I didn't. Huh. Ain't that a bitch? So this is in EST, so midday. This is midday. So midday New York time. There you go. Bitcoin's like starts to have... We had the massive dump. There we go. Minus 7% candle change. Ooh, lord. And the next instant recover. As you can see, highly volatile. But the medians, everything really stays together. But super bullish on at 5 a.m. and that's just again daily imbalance set. No, it's not. Oh god damn it! Again, I have to do so many conversions. Can we just like all live at one time zone? Can we just do that? That'll just save me so much effort. Can you guys? I mean, that would be like the perfect scenario if everyone just was on my time zone. Just say it on based on New York time, but let me double check. They don't do that. Yeah, this is an EST, but I need to do the conversions from EST to my time, and because I don't. It's so annoying. Yeah, but yeah, EST is great. Only if you what do you call it? Only if you don't have to do any conversions. Like outside of New York open and close, I always get lost about time zone. I'm looking for Ethereum. There we go. There's Ethereum. So we saw you see a lot of trap areas here. This is future. Oh, this is spot. What am I doing? You can go to spot. That's futures. This is spot. There we go. We can see that here. A large amount of volume buys here. Absorbed. So again, we're probably looking to come down off of this. Hopefully, if we come down off of this, we can look bullish. If we can rally at 10, that's sort of what you're trying to expect. Large sort of absorptions. Again, you can't use an absorption indicator on the crypto market, but you can tell if there's potentially anything happening. We're not going above this, so it tells me that they want to be below this. So they tell if as soon as they're above this, they let these guys go. So as soon as they go above this, they're releasing these they're liquidating these shorts to cascade higher to then pull back down. If you go into Binance futures, see what's where the trades are. We did get a large amount of longs trapped here. We know that. We can see that here. We don't have to guess if they're longs or shorts. They are longs. You can see those. So they're shorts being opened on the opposite side to counter that. We're potentially waiting for New York high to be taken out currently to then push it back down. We have the daily imbalance here. This will probably be your best case. Drive out the shorts present here. If anything, pull it back down. You want a long here. You want to short this area here to then push back in. You want to see large sort of green dots. Pull back in. You see a single person. Half of that is a single person. A single person entity is here as well. So you're seeing a lot of sort of institutional sort of bias to short these areas here or enter a short here. And we want to see if these stay by the time we come up to here. So sort of marking this out. This again, the area is your area of short. We have a small area we want to be below. I'm going to pull back in, come back into here, absorb to go long, absorb to go short. Even if we tick high, we want to tick high a couple of ticks. We want to see this similar sort of pattern here. Absorb, pull it back down. Very wicky in the hour, coming back down. Similar story here. Being super aggressive, and it's just basically setting up pins to knock it down from the looks of it. So it's something I would be careful for. So it might be again a down day. If you look at sort of higher time frames, we're still yet to taking out this area here, but we're seeing again an increasingly amount of willingness to hold this area, and it just might be something that might tailor itself to if we take out there might be one more swipe down. It'd be a long scenario, but we see this area, and if we zoom out and book maps and the spot books, zoom out very aggressively, zoom out, you can see just a bunch of just absorption here, and it's just like a bunch of just shorts, and every time it's just someone to answer that day in and day out, just say, you know what, this is mine, this is mine. We even close out there even here, and it's just, at least to me, it's sort of midterm. You want to be bullish on Bitcoin. Just looking at these sort of high time frame candle setups. Even if we sort of come in, if New York sort of, you want to see, and again, you want to see New York pull down. You want to see New York pull down, take out liquidity, then push up. But generally speaking, it's sort of ready to sort of try and push up, and this sort of is just testing the waters, see where people will drive in. People were so bullish that it just collapsed. The ass collapsed on itself. I mean, we're sort of coming to, yeah, we've got 4 minutes. Yeah, we can call it. We can call it here. I'm extremely busy anyway. Any sort of questions to wrap the day off? Still need to get a couple of things to make this nicer. But generally speaking, you're pulling down, and you want to see price pull down until 10, ideally, and set up and pull up higher. So that's generally what you're saying for sentiment. No, wait, you're seeing that pull, you want to see that pull down, try pull it back up, ideally take Tuesday's low, but you're not sort of fast if it doesn't, because it hasn't been taking it for a while. We do have liquidity present, we do have these stops area here. Need signal, God please, pull it back up, and you want to see this again. It'll be the area of liquidity here, and what that will look like, or what you're looking for, is closes to be wherever they you want to see closes together. Just try and be grouped, especially on the higher time frames. If it comes to that, let's go out to 4 hours. You want to see it above, I think, 22,850, just thereabouts, 22,850 to 2800, which is basically the start of the area of the shorts. You want to see this. As you can see, these clean closes again translate into a very nice sort of area on Bookmap. As you can see, start of the shorts here, start of this sort of deficit is just essentially where we have these areas and this bias absorb. So you probably want to give a signal and then go. Give signal long. I only give directions. You guys can execute however you want. Because then you can't blame me, because you're the one that messed up. Because I hold no blame here, because nothing I do constitutes financial advice. It is just me talking. I think there's more people willing to line up to give you that. I think who's on next anyway? I think JTrader or whoever's on next is on next. When TP 100k, TP again, you're just wherever you used to buy, and you're just doing the opposite to sell. You're just looking for large volume dots. You're ideally looking to sell into 20 this area here where you see these bids already set up. That's where you're looking to take partial profits. You're seeing this area of pulling here. So this consolidation, bit thin on this area, thin on the books, but ultimately 1, 2 probably if we're lucky. But we saw a large amount of longs instant here, pulling back up. On the charts, don't you have one? You should have one. You should have just got one. There you go. The IC. Did you not put your name down for it? You say long TP at $50 moves, then we can stop at. This marks everything. It's not a $50 move, is it? Oh no. But no, if it wouldn't be a $50. It's a $100 move, if anything. I don't have that one. Okay, cool. You should do. I'll double check that after this, unless it's new. No, it's not new. You should have had that one. We're seeing shorting here, which is weird. Okay, people are very antsy to short. They might try weekly extend this. See if these guys get taken out. Pull it back down. Probably looking to short there. Pull it back down. You're probably looking to long around this range. Oh, there we go. These guys are setting up now. Setting up. So we're probably gonna hit into there soon. Once they set up, pull back up, pull it back down, and you're just doing. You're gonna again just do the opposite of whatever the sessions end up doing. We come up. If we spike into the highs one more time, pull it back down, and we're just trying to carry that down. Target this, probably collapse into that further. Very neutral into this. So traders just say, I don't know. I'll check it after the stream. Actually, I can't. I lied. I gotta check it when I'm free. But you should have it. So we're extending it slowly. We're still trading into here. Potential to drop it down. Let's look at the future market. They're setting up here as well. We're keeping even. These guys are thinning out. The one trader's still there at the VWAP, so it might be a case in point where it just absorbs at the VWAP, pulls it back down, and gives you a long layer on, which is still fine. Again, you're looking to execute positions around 10. This is New York Open now. You can look at there we go, but it's just absorbing aggressive selling on open. I think if we go into, it'll be delayed, but if you just look at the ES, yeah, I mean we where did we close? Yeah, yesterday we did nothing. We closed around here, so there was essentially inventory trapped, pulls it back down, aggressively absorbs, spikes it 2 times. We still probably have that spike left in us. Again, people won't be trading here unless they have that ability on the exchange. Then we're probably pulling that up. So you're probably seeing this area potentially looking bullish again. Today looks bullish. And I'll catch you guys tomorrow though, and we'll see if it ends up being bullish. I am so busy today. Okay guys, thank you so much for coming. Hopefully you guys enjoyed this. If not, hit a dislike button and tell me why. Yo, what's up, Zach? Thank you, man. I just thought it looked nice. So you already can see where EOS is moving. Already. Why do I not have icebergs up? Oh god damn. Ugh, it doesn't work. Okay. So you're probably looking bullish. You're seeing absorption. You're seeing that hopefully, and you're trying to execute probably at 10 to be safe, because it might just drive itself down a couple more times in the session. Play in the wick. You're probably longing here to then pull up. Again, pay attention to the area at 22,800, the start of the deficit of the short, and pay attention to Tuesday's low. And you're taking that 25 to 50 pips away, so that is all the way until 2600 minus 500, 2100, all the way up until here is your sort of maximum give you want to see. Ideally, you want to see 22,400 as your best worst case to then push up and absorb into that long. Yeah, you do. See, you do. I remember giving it to you. And the same thing is showing on futures. So start of areas of heavy shorts. You want to see the same accumulation. You're not seeing much sort of shorts being accumulated anyway. I mean, shorts being liquidated too much. So you want to see that drive down, accumulate more shorts. If it accumulates more shorts, you're driving that up. If it doesn't, you want to see this sort of liquidate shorts. If it liquidates shorts, you're doing the opposite on New York Open for the most part. And you probably want to drive it around 2300. Okay, that's about me for today. I got to get ready for an event. Other than that, I will catch you guys on the flip side. Again, I'll try. I've been really tired, so that's why my voice has tapered off the more I speak. So I need a reset every now and again. Peace.